Hey everybody, welcome back to Markets for Millennials. Happy Sunday. Getting this in hopefully before markets open on this Sunday afternoon. I apologize I didn't make it on Friday for the weekly market wrap. This is the weekly market wrap for last week, which was July from the 19th to the 23rd. And today, what I really want to focus on, we'll look at all the equity markets. We'll look at the dollar and yields, we'll look at gold, silver, and we'll also look at Bitcoin because some things have been working on Bitcoin since the last time I made my video, my most recent video on Bitcoin, which is about a week and a half ago. And so what we'll be doing to start out with is taking a look at Treasury yields here on the 10-year. And what if I pull back here for just a moment, I want to just point out that ever since the beginning of August, we've been on this uptrend. And if I darken up some of these other lines here, then what you'll see is that we've had varying stages of this rally in bond yields, which obviously yields are inverse to the price of bonds. So that means that bonds have been coming off ever since the beginning of August. And so you can see that we've had kind of a tale of basically these three trend lines. So we've had kind of the more shallow momentum from the bottom in August. And then around November and into December and January, we kind of established kind of a higher or a steeper line. And then we really took off the end of January with yields. And we obviously have broken that back in April. We broke the steep line in April. So I'll darken that back up. And then here in the end of June, we broke the second line. And as of last week, let's see here. Actually, right at the end of, not last week, but yeah, okay, so actually that would be, because if that would be the 16th. So on the 16th, we closed below our trend line here, the lowest trend line. And what's happening now, if I kind of move this over a bit, is we're basically having our retest. And what we'll be looking for here is, will this continue down? I don't know why that's green. That's really strange. And so that's what we'll be looking for. Over the next week, will this looks like it's already retested, and will it resume down? Or we also have a support line, which I've kind of messed with this over the course of this consolidation. My original bull flag was right here. We obviously broke down and retested and came down. And so I don't mean at all to presume that this descending trend line here. I mean, it's parallel. It shows the symmetry of the markets. You can see we had a touch here on the left side of my screen if you follow my mouse, and we closed right at it and bounced off, but we did break below and we came above it, and we've wicked down on it. And so I don't presume to say that this is very strong support, but it is totally possible that we could get a resumption off of this. And then the question is, will this ascending trend line, will this area be resistance now? Or will we be able to kind of break through it and then test it and then come to the top of this channel and get above it and move on? I mean, no one knows, but kind of at the rate that things are going at now, I'm actually looking for this to continue to the downside. There was a time, recently where I thought we were going to consolidate, because you could see right here, you could see right here we were making, I don't know why that's not turning off. We're making higher lows, and we wicked down right here. If I zoom in a little. And so I was actually originally looking for this consolidation to play out to the upside because it's following the move up, at least in the near term. Obviously, that did not play out, and we actually came down below, retested, and resumed down. So these are conquering the market's setups all the time. So if I actually, put this line kind of back in, now I can't draw a line to save my life. But if I kind of draw in a line right there. When we came down below and retested it and then resumed down, that was a CTM entry, or perhaps even when we drop down below here and we retested up here and resumed down, that's also a CTM entry. And right here, we're looking at another CTM entry. So if we come down, as I've been pointing out, if we come back and resume down below, that's an entry to the downside on obviously not, I'm not taking trades on yields. I don't even know if you actually can take a trade on just the yield, but definitely not going to be buying bonds or selling bonds in this case. But anyway, it looks like it's going to continue down to the downside. And so that's kind of what I was looking at on yields. And as a result, obviously the biggest beneficiary of lower yields as far as the equity markets are concerned is the NASDAQ. And I've got a lot of lines going on here, so let me kind of explain where I was coming from. We had this kind of momentum coming up. So a week ago, actually, I had said, or a week and a half ago, I guess now, on the 16th, I had said that because of when I look at the NASDAQ and I look at the rises right here, when I look at right here, even right here to some degree, when I see the rises and when the move up starts to wave and curve up to the top side, those are when I start to think, okay, so we're going to get a little bit of a correction here, or at least a drawdown. And we did on Monday last week. We had a really big down day in all the markets. It was a pretty red day. People were freaking out, which is crazy because if you want to just, just for giggles, right? If we want to go from our close on Friday to the close on Monday, we didn't even close down 1% on the NASDAQ. I know it was a little bit different on some of the other markets, but the point is that it did not close very low between Friday and Monday. It wasn't a huge drawdown. And plus, if you want to pull up, I believe this is a 50-day moving average. It's not the exponential moving average, but if you wanted to put even that would be a little bit of a tighter correlation. You would see touches on the 50 EMA right here, right here, right here, and right here, and even right here. And that's definitely also the case on the S&P. But suffice to say, we haven't even come down and touched the 50-day moving average. So, you know, we're still very, very bullish. The question is why. And before we go and look at the other indices, I want to take a sidestep here, and I wanted to throw this up here. What I did here is we're looking at the Invesco China Technology ETF. So something that's been happening in China is they've kind of been cracking down. I know that this chart's kind of not very good, but anyway, you see here that basically ever since the middle of February, it's been on a very clear downtrend, and we are about to. We'll see if we make a lower low than the kind of mid-May low. So this is CQQQ. It's the China Technology ETF. And what you notice if you look at some of the Chinese tech stocks, they've all been kind of on this decline. Like this is Alibaba. This was real hot. People were. I'll never forget in 2020 after the fall, kind of in this area, people were buying up Alibaba like crazy. It was another one of those hot tech names, and unlike the rest of tech, I mean, it has not made new highs since October of 2020, right? And if you look at the chart over the last week, you actually can see other than this rise, this is Weibo, this is like Chinese social media kind of. They haven't been able to make a new all-time high. You kind of had a spike high here, but you've kind of seen them sell off. And if you look at some of the other Chinese tech names, you're seeing them come off. You see on Friday, this was down over 12%. on the day. So that's a pretty those are some pretty big moves to the downside over the last couple of months on these Chinese stocks. Okay, and so that's kind of the reason why this technology ETF has been so low. And so if you do a side by side, if you measure it, the CQQQ against the Qs, basically the fund that tracks the Nasdaq, what you see is clear outperformance, um, basically ever since, let's see here, ever since mid-February. So right around that same time that that CQQQ has been coming off, we've seen huge outperformance um, on the Nasdaq, right? So we've kind of got, if I can draw this trend line here, we've got some. I mean, it's clearly up. Um, and so I've heard this on podcasts before, and that's what made me want to check it out. But if you look at the sectors, even if I go back to my sectors, let's see. So communication services is up, technology's up, right? Whereas a lot of these, if you see on the right side of my screen where these are flagged, um, these sectors that are flagged have not made new all-time highs, or they are consolidating sideways, or they're significantly down. And obviously, energy and financials being some of the worst performers as of late. Um, and so that's, and also materials. Um, so there's a lot of, people are, it's easy to point out that technology is what has been driving the move higher in the markets. So just to kind of, I mean, a lot of people have been talking about how it's possible that these Chinese tech stocks, in the wake of China clamping down a little bit, that a lot of that money has been going out of these Chinese tech stocks and into the Nasdaq, into basically the FANG name. So if we go down to Nasdaq, if we just look at, Apple all-time highs, Microsoft all-time highs, Amazon just a stone's throw away from all-time highs, but it broke out of its sideways consolidation. So if you look here, ooh, that's a really bad. I'm going to have to use a horizontal line here. You could see there, right, very clear, the top bound, the upper bound of this kind of sideways consolidation. I can put another one down here to just kind of show you, right? Consolidating sideways basically ever since July and August of 2020. And we have a clear breakout and a clear retest here. Right, so Amazon also basically on its way up to all-time highs. Look at the move on Google, right? Up 3% on Friday alone. Um, Facebook up over 5% on Friday alone. And so all that panic that was being had at the beginning of the week on Monday last week is basically gone. But most of it is happening on those names. Like Tesla is a big part of the Nasdaq, and obviously we know last year it got added at the end of the year to the S&P 500, but it's I mean it's not even close to making all-time highs, um, right? So you've got a lot of these tech names. Netflix isn't even making. Look at Netflix and its consolidation, right? So the point is that very few names are actually carrying the Nasdaq up, and as a result, you have also the S&P making all-time highs. It has, basically taken back that whole rally or that whole sell-off and rallied up to all-time highs. Here's a good look at that 50-day moving average at the S&P. Look, we wicked down to it and it got bought up right away. All right, so S&P at all-time highs, but you have to remember that a high percentage relatively speaking, of the S&P is Apple, Amazon, Google, Facebook, Microsoft, those tech names. So as the Nasdaq goes, as those tech names goes, so also do the Nasdaq and the S&P 500. And you can see the evidence of that if you take a look at the Dow, which has closed at all-time high, right? It hasn't taken out its highest price yet. It's wicked up to its highest price. It did close above this resistance that I had placed here. So maybe we can actually move this to the top right here. Right, so it's wicked up to it. and it's closed at its highest. It's had its highest close ever, but it doesn't look uh, as decisive as the S&P, or definitely as the Nasdaq. And then the Russell small caps, and this is something I've been watching for a long time. Um, you have the Russell basically sideways, right, in this range ever since February. And the Russell is not confirming. The Russell's been playing with this trend line that goes all the way back to the March 2020 lows, right? It kind of dropped below it and then came back above it, and now we're testing it. So the direction of the Russell kind of shows you that this rally is not being, it's not happening on the Russell. It's not happening widely like it is on the Nasdaq or the S&P or even the Dow. So, that's the thing. So I've heard it said on a podcast recently that maybe the rotation is maybe out of China and into American tech stocks. And so, and then you've got a lot of people talking about how, the environment that we are in right now is potentially deflationary. And if you think about it, what was happening, and like a lot of people are concerned about the Delta COVID variant and all that. I just want you to like think back, if we go back, let me go to the S&P here. If we go back to 2020, right, if we just try to fit 2020 on this page, right, we had we had the March lows, right, we had the panic sell off, the liquidity crisis and all that, and then we kind of just started marching up. And what were the names that led the way? They were those tech names. And even though, I mean, how many different places along the way, right here, right here, right here, everybody was saying the crash was coming. In fact, when price started to level off over here in May, a lot of people were saying that, it was only a matter of time before we bounced down to revisit the lows, right? And that never happened. Okay, and what was it that led that charge? It was the tech names. And so a lot of people are saying, it's kind of interesting because a lot of people are saying, well, this, the movement in equities is not equal across the board. Well, it hasn't really been. And if you consider, long-term time horizon, it really hasn't been ever since the financial crisis. So at the end of 2009, March 2009, when we made the lows, I mean, it really hasn't been, the case. Like tech has been outperforming for a long time, right? So you can kind of see that in the sector overview if you look at growth versus value, right? Look how far back that growth has been outperforming, right? A lot of people are saying, oh, well, we're going to go into a secular shift where it's going to be value outperforming. Well, I don't know about that, because if you look at this long-term chart going back to, if I just want to draw this line, say like this, it's not clean by any stretch of the imagination, right? But if I just draw that line, or maybe we'll go from here in the middle of 2008, and we maybe connect some of these touches right there, right? I mean, we're still well above. I mean, in order for me to be convinced that we're in a secular, shift to value, we're gonna have to break down pretty far. And in the environment that we're in, I just don't see that happening. And I could be completely wrong. I'll draw in, maybe a trend line from here. Maybe this would be a better trend line to look at. I don't know. But I guess the point that I'm making is it's entirely possible that we just continue seeing growth outperform value. And what that means is we'll see the Russell and probably the Dow underperform compared to the Nasdaq and compared to the S&P, so long as tech remains, at least for the S&P, as long as tech remains the largest component, or the component that has the largest percentages in terms of market cap. Right, so that's, suffice to say, I don't think there are always warning flashes. Everyone's always looking for the crash, but right now there's nothing to me that indicates that the crash is coming. And so for now, I'm going to be watching. I'm not going to buy equities because, I mean, I'm just chasing momentum, and it's possible that we might get a larger correction. I mean, we had We had, obviously, it was like 20, 30% in the March crash. We had 10% and 10% in quick succession. It's pretty normal to have a 10% correction in a year, and maybe perhaps more than one. So maybe I would wait for that. But it seems, at least for the S&P, that the best buying opportunities thus far have always been once you hit the 50-day moving average. And so I don't think you can go wrong with that, but you obviously just don't want to chase. So that's kind of the view on the equities right now. So definitely tech is outperforming. If you go back to things like financials, they're underperforming, energy underperforming. If you have the view that the reflation trade is still on and that inflation is coming, then maybe this is just a good buying opportunity um, for these sectors. So in energy, we're coming back down, getting close to the 200-day moving average. Financials were under the 50-day moving average. In the materials sector, we're under the 50-day moving average. And in a lot of these that I flagged, not all of them as you can see, but in a lot of these that I flagged, they're under the moving averages, whereas these other sectors that have been outperforming, they're well above their moving averages. And so that's just something to take note of. So as long as the 50-day moving average stays above the 200-day moving average, momentum is up. And I mean, there's no amount of fear or concern that can change that. And all of this is happening while the dollar has been slightly strengthening. Now, the dollar has been in this kind of big sideways range for a long time, right? So a lot of people are looking at the move on the dollar, that this move right here, and talking about, oh my gosh, the dollar is going to go to 100 and everything's going to crash, and there's going to be, like, people are making all kinds of assumptions, and it's entirely possible that the dollar could stay strong and can move to the upside, and stocks can still go up too. And so, I mean, like, if you just want to, let's put these, maybe if we compare the the Qs to the dollar, right? I mean, I don't know. Look at what you see. I mean, it's kind of hard because of the way it squishes, um, the chart, and I guess log charting it doesn't really help. But point is that it doesn't seem to matter if the dollar is up or down. I mean, the Nasdaq has been moving up, tech's moving up, the S&P's moving up, stocks are going up, and we have the accommodative Federal Reserve accommodative policy, and so I don't see any reason why that's going to stop. For me, the DXY has to get above 93.30 for this to really mean anything, and it's better as far as dollar bulls are concerned. If we can get up to the 94.55 level, then that's where we shift completely back to like 100% dollar bull. It'll be more bullish if we can get above this resistance line here at 93.30. But until then, dollar hasn't proven itself either way, and it might not for a while, and that's just the way it is. We just take a look at gold. Gold is kind of stuck still in that same little range that it was in, that I looked at last time. Broken some short-term momentum. I'm going to get rid of that line. We've got a lot of different lines happening on gold. I just recently like, you can see it faintly in the back. You see some various angled lines. I most recently added these lines to see if there's any market symmetry. It looks like there is, from the top here in August, the recent top here in June. If you clone that line, there's touches here in August, September. It broken, and then resistance for a few days, and then again support, and then resistance, and then support. And so this channel seems like it could be in play. And then also this long-term trend line, which is a clone of trend lines that came from from 2015, that I kind of worked all the way up through these different moves, and I cloned them all up and down. This has been some support, as well as, I'll darken it up so you can see, as well as this line has also played some key support, right? So there's a lot of potential direction, like a lot of potential things that could happen on gold, and it's not certain. And you would like to believe that, like a lot of people are saying, okay, yields, for example, yields are coming down. Well, why is gold, other than this little rise, why is gold selling off? Why is gold coming off? And the same with silver. In this kind of environment, most people are expecting gold and silver to take off. So that means that there has to be something behind the scenes that is causing this. Could it be money flowing back into Bitcoin? Possibly. This gold line right here is if you use the Fibonacci retracement from the previous previous bull cycle peak closing price to the bear market low closing price, then your 1.618 Fibonacci extension level is right here at this gold line. You can see we came down right almost to it. This was our lowest close, and ever since then we've had this bounce. We've had 1, 2, 3, 4 daily candles in a row, and we're working on our 5th green daily candle in a row. And that happened all the time when we were in this rise up before the distribution of Bitcoin. And so to me, this looks very bullish. We're not out of the woods yet. Where we have to get to is this trend line, which a lot of people, especially in CTM, shout out CTM, have called this the most important trend line in crypto. I tweeted that I believed that by July 31st, by the end of the day, July 31st, that we will have come up 30% from the low. And that comes because I looked at the mid-cycle dip here in the 2017 bull market, as well as the mid-cycle dip low in the 2013 bull market. And in both cases, I basically calculated how much time it would take to move a certain amount of percentage. And so to me, I'm thinking that, I'm looking, I've been wrong in my price predictions before, totally willing to own that. So I'm looking for us to, by the time we get to the end of July, I'm looking for us to be somewhere between 40,000 and 42,000. And if that's the case, then that'll be perfect, because we'll be finally at the kind of daily swing high from the beginning of January, before this accumulation took place, or I'm sorry, before this distribution took place. And you can see that that played a key role here as resistance. And so if it all plays out like I think it does, then that means that at the end of July, we will hopefully have popped up above this and turned it into support, and we'll consolidate underneath this trend line before breaking out. And I think once we break out, it's only a matter of time, before, I think it could be, maybe a month or less before we get to, let's see, so that would be in this range before we make it back to our previous all-time high and go into price discovery from there. So that's kind of what I'm seeing with Bitcoin. That's kind of where I think things are going. Could be wrong. Obviously, not financial advice. Do your own research, make your own financial decisions. Ask an advisor, ask somebody who does it for a living. It's just my view. So that's kind of my view on the markets. That's what I'm looking to be happening in all of the markets. I hope you enjoyed the video. Please don't forget to like and subscribe and share with somebody if you thought that this was helpful. Thanks for watching, and I'll see you guys next time.